Greetings traders out there in Traderland. My name's Dez here on Thursday, July 12th, 2012. The markets extend their losses 6 days in a row here. Dow down 31 points, down 0.25%, 0.5% on the S&P. Nasdaq down 0.75%. Very round here. I like that. Russell's down 0.33%. And the bank's off by 0.44%. The VIX up 2%, confirming today's drop. And we have gold down, but silver up, and crude oil down. So mixed commodities. And the US dollar up 0.22%. And here we are looking at the S&P daily. We've been watching these two lines for some time now. This blue line, let's review quickly. We have support down here at this lowest close, up here to this lowest close, and over. We doji at that. Very tempted to go bullish yesterday because of weaknesses I saw in the Dow and some other areas. I decided not to go long, and glad I did not, because we broke a major trend line. Well, this in my books called a main trend line, not a major trend line, but we did make a lower high and a lower low. But it is hammer time for all those who grew up in the 80s and then more specifically the 90s. We do have a hammer, and that is anytime you have a lower shadow 2 times or more that of the real body with little to no upper shadow, you do have a hammer if it happens at the bottom of a leg. And we certainly have that. 6 days to the south tells us that we could be in trouble, because now we have 6 bars heading down. For you Grok grads, you'll know that that is a leg that is most conducive in a down type trend. Even though we are still in an uptrend, higher swing highs, higher swing lows, we could be in the makings of a trend reversal at this moment based off of this. Furthermore, let's go to Fibonacci retracement, and I'm going to go from extended low to extended high, show you that we did find some major support at 61.8 and the 50-day moving average. So both of those are coming into play. That is the only thing really helping this, and the fact that we did bounce off these lows. Look where the shadow went with this line that we had drawn a couple days ago. 1325.75, that's precisely where we went, found support there, bounced back up. Now we have this hammer. The question is, what is going to happen tomorrow? Because gang, anytime you get a pinch between the 20-day moving average, the 50-day moving average, like we did yesterday, and now we're seeing that again today, expect a big move to happen. But now we have dropped below a main trend line. Matter of fact, we closed below what we call a minor trend line. That's that orange one coming higher here. So a lot of damage has been made. But we are at 61.8 Fibonacci, and we did find some relief from these lows where we did bounce back up, giving us a hammer, and we have extended ourselves down to the downside. The question is, can we go higher? I would really be looking at if we can get over 1343. If we can get over 1433 and stay above that, we could heal itself and get back inside this apex of this symmetrical triangle that we're seeing here. If not, if we go higher and stay on the wrong side of this main trend line, all we could expect is a drop to commence. Okay, so there you're seeing my thoughts on what we can expect into the future. It's really cool to see how these trend lines and these support resistance lines hold so much weight. Make sure that your lines match what I have on these videos. I think they will play themselves out quite well. Listen, I would love to be your mentor. A lot of you have never thought of having a mentor, and I'm here to tell you that you do not want to trade without formalized trading education. We're here to help you. Go to the mentor page on our website and watch the testimonials, read about it, fill out the form. On the page, all you got to do is go down here, click on mentorship, and make sure you like the Facebook page. But watch these videos down here of all of our students. And if you just want to talk about the mentorship that we have coming up, fill out the form and we'll set up a call and just have a chat. Take care. Safe trading.